Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Disappointing jobs news and another earnings season. That's what we're talking about this time around with our panelists, Editor-at-Large Steve Reitmeister, Senior Stock Strategist Kevin Cook, and Market Technician Kevin Matris. This edition of the Roundtable. So, last week, not a good week for jobs data for the month of June. Some pretty disappointing news. It's got a lot of economists and analysts out there confounded. What's your take on it?
Yeah, well, I think confounded is more the better word than bad, because early in the week you had an ADP report, which was a nice bounce up from the past. And then you had a jobs number that was confoundingly low, and I'm fairly confident that the ADP number is more accurate. Now, the ADP number is a bounce higher, but it's still not a robust number. Still not like the employment rate's going to be dropping anytime soon. Mm-hmm. It's just that the ADP, for me, has shown over the last few years that it's a better leading indicator of where things are going, and that the government numbers often have to play a bit of catch-up, okay? But when you get a number that low, it's hard for investors not to react and give it some credence. But I think it's going to bear out here over the next few months that the government numbers are going to come back up, because it's a survey method, it's prone to hefty revisions, and I think it's going to show better signs than what it did last Friday.
Kevin Cook, there was optimism going into that number on Friday morning. Has now the revelation of the number removed any of your optimism going forward here?
Not really, and look at the way the market reacted. The market didn't take it that bad on Friday. So they may also be looking at the ADP numbers that Steve just talked about. It confirms one thing for sure, and that the slowdown is real, and it's happening, and we're in it. Because we'd love to see, jobs recovery, 300,000 a month, and we're just not there yet. And we won't be there for months. But the market isn't taking it that badly. You look at what happened Monday, big meltdown, but it was all about sovereign debt. Right. The U.S. crisis, what are we going to do with the debt ceiling, and what are they going to do in Europe?
Right. So, Kevin Matris, what is it telling you as far as the economy is concerned?
I'm still kind of optimistic. I'm looking at the bright side of this number. I think the number was better than the headline number suggested. Headline came in at 18,000, but that was because a lot of the lost government jobs were factored in. If you were to back those lost government jobs out, private payrolls came in at 53,000. Granted, that was a far cry from the 157,000 that ADP was suggesting and the 105,000 consensus, but 53 is a lot better than 18. And if you look at where the job growth was coming from, it came from a whole array of sectors. The biggest problem was just construction. But if I can add this in, I saw an article from Warren Buffett on Friday, and he even said he expects to see unemployment in 2012 to increase. He believes unemployment will fall below 6%. And he is saying that once we see real estate rebound, you'll see construction jobs pick up, and that is how you're going to see this whole new leg of the economy recover. And if you look at our job recovery right now, it is devoid of construction jobs. Yeah. So given that fact, no construction jobs coming online, I think the economy is doing pretty good.
Kevin Cook, I want to come back to you on this jobless things, and then I want to get into earnings season here. We've got some jobless benefit checks that are going to be set to expire here by the end of this year. Is that going to put a lid on this jobs growth scenario going into the second half here?
I don't think so. And I want to go to what Kevin just said, because Kevin's talking about the recovery in construction and what that does for jobs. That is a strong part of any economic recovery that we haven't seen yet. Yep. So I think a lot of institutional investors are looking forward. They're looking out 6 to 12 months saying, when we see that, we're going to get that kind of job growth, and that's going to be a real shot in the arm for the economy.
So am I hearing, Steve Reitmeister, that the disappointing jobs news is not going to overshadow Q2 earnings season?
No, I think it's kind of like, people were getting set for that. Here comes the job numbers, but don't overreact too much to it, because earnings news is going to trump that. Earnings news, four times, I can't even do the math, four times a year, right, every 3 months, is the most important thing that's going on, because it kind of tells you a little bit of everything. It tells you a little bit about GDP. It tells you about the direction that things are going, not just from the earnings that are reported, but it's the forecast of the future. How comfortable are they with the guidance? And that's what we're all set for now.
Right. And I want to talk about that guidance for a moment. Corporations, some people are expecting them to lower their guidance here this year. Are you?
Okay. there's the earnings season, right? But what we just came through is pre-announcement season.
Right.
Okay, pre-announcement season is the folks who have bad numbers will come clean. I'm saying the folks with really bad numbers. Did anyone see any pre-announcements? No, we just came through a fairly clean from the pre-announcement season. That is good foreshadowing
Right.
that the numbers are going to be solid. Plus, you have where estimate revisions were in the month coming into this earnings season amongst the weakest, meaning there was more negative revisions than positive revisions, meaning that the consensus estimates for most stocks have been slightly lowered. So therefore, the hurdle to get over and impress investors is all that much better. I will throw in lastly, Alcoa's numbers last night were not impressive by the least. The stock is up slightly this morning. Why is that? Because the benchmark has been lowered for what people are expecting going into it. So in other words, sometimes it's good to have low expectations, and that's what we have in this earnings season. And so I think we'll be more easily met and exceeded.
And I guess I was asking about guidance going into the second half. I didn't make that clear.
Yeah, and what I'm saying is, so you have Alcoa as the first runner-up, and they're saying, the revenue was very good, the costs were a little bit higher. That's why they only met expectations. They see demand for aluminum, which is not a great bellwether for everything, but they see demand for aluminum very good. Or if I peel back and I go to FedEx, okay, which is a late June earnings report.
Right.
That's a very good bellwether for what's going on with the economy, and they felt very good about what they saw, ahead of them. So I'm feeling that the guidance is going to be fine.
Kevin C., you got something on that?
Yeah, Steve was talking about the bar is lowered, right? So
Yep.
it's easy to beat. The Journal ran a story last week about don't pay attention to earnings surprises because everybody gets to beat, right? Well, you've got to know how to look for the companies that can beat,
Right.
and that's what we do.
Okay. Kevin M.?
I was just going to say guidance is important because everybody's expecting the second half of the year to be good. You're going to need to see companies expecting good things in the second quarter, or excuse me, the third quarter and fourth quarter to be able to support this belief that the second half is really going to be as positive as everybody believes.
All right, top stock pick time.
I'm going to go for Cascade Corporation. They are a maker of forklifts, and plain and simple, if the world economy continues to expand, especially developing markets, they need to move more goods in an efficient way, and forklifts is a mechanized way in which to do that. They're having great exports of these products, explosive earnings surprises last few quarters, and I think that the recent downturn, they took it on the chin a little bit harder than they should have. Stock worth easily in the 60s, maybe even $70 per share, and throw in a 2% dividend yield. It's a very attractive pick.
Company that does the heavy lifting.
Yes.
Kevin M.? Or Kevin C.?
Suncor, symbol SU. Canadian Oil Sands. I like oil staying above $85, and I think that's good for energy stocks. Speaking of earnings surprises, we did a screen last week, and Suncor was one of the 30 names that came up most likely to have a real earnings surprise. So I'm a buyer of Suncor anywhere below 40, definitely up to 42, and disclosure, I am short puts there.
Oh, okay, cool. Thank you, Kevin M.
Steve, time me. My stock is Blount International.
We're already over.
My stock is Blount International, ticker BLT, great ticker. They're an international manufacturing company. They serve three primary units: outdoor products, industrial and power equipment, and sporting goods. Sporting goods, by the way, is doing fantastic right now. They're in a strong industry. They're projecting double-digit growth rates, and what's really nice is that their valuations are well below the industry's median on so many different metrics. If you look at the chart, they just broke out of a symmetrical triangle, and if you looking at the short-term price target, I see a 16% increase from current levels.
All right, and on that note, we thank you for joining us for this edition of The Roundtable. Hope the week ahead is a profitable one for you, and we'll see you next time.